All right, so let's go over the end of day shit. Closed a little bit above the market maker's expected move here. And by a little bit, I mean way the fuck above the market maker's expected move, which was 77 points. This pushes us out with a little bit of padding from positive gamma. Um, we'll see if we run into resistance here. This is kind of in the gap, which is not yet filled. The gap to the upside closes at what is it? 68.51. So we're kind of close to filling the gap, but it's not filled yet. But I would imagine bulls will stay at least fairly strong into that test. If not, push out to like where Vega neutral is, up here at like 68.82. We don't have any data yet because the government's still not reopened. So, data uncertainty is probably going to continue to keep volatility a bit higher at the long end. Um, but it is coming down. On futures, the 67 and 68.90 tests to the upside are the next two mild resistance levels, but no significant resistance until we get up to like 69.17. Um, tomorrow, I mean, depending on the overnight move, and if we get some squeeze up here into close, I would say that an open under 50 would probably mean we trade in the lower range for the day. See if volatility grinds down, kind of flattish. Um, if we open above 50, we can probably push out to like 75, 80. So some range for tomorrow. It'll really depend on how things reposition, but I'll write it up tonight. Yields at the top end of the curve and the bottom still moving up. I think there was a pass through on the 3-year auction today. The belly moving up the hardest. So bonds between like the 1 and 5 year dropping the most. But yeah, the back end up also. Dollar up on the day. Correlation came down pretty hard, kind of flattened out into close. 3-month correlation about the same as it was earlier this morning, but 1-month correlation getting a little bit more interest and dropping at a more precipitous rate. So slightly lower than this morning. 3-month correlation slightly higher. That might be an indication that demand picked up on like 30-day index vol as price rose, but they're still shorting the near term volatility. So until that breaks down, the 30-day vol won't really matter much. Commodities up across the board. Silver spiking back to 50, which is pretty impressive. Copper up quite a bit. Gold surging back higher. So rate cut expectations improved with the government shutdown possibly ending, and oil back above $60 a barrel by the end of the day. So people shuffling back into the short dollar trade despite the dollar not actually dropping. We got a bit of a bump still in bond volatility. However, it is very low. And correlation on the 3 month is falling, which means we may continue to see bond volatility drop. We saw a spike in the front end, back end of the yen leverage. Forward yield on volatility falling, but not nearly as much as like VIX fell today. So there's definitely still some people carrying big baskets of bonds that want to hedge that volatility risk, and that's keeping some pressure to the upside on the forward yield of vol, especially as you see like the 10 2-year fall off, but forward yield on vol's continuing to rise. Um, if the dollar continues to go higher, they can add more leverage to this, but otherwise, it's been fairly static for some time now. Skew falling on Friday. Probably see that pick up today. Breadth, improving a little bit. Let's see. Yeah, Dow and Russell still trailing tech. So again, a lot of buyers for tech, but not too many in the broader index. I wonder how RSP did today. Yeah, not up nearly as much. So still a lot of over concentration in the dip buying, um, which I think is a lot of what's leading to these like volatile blow-offs every time we test new highs. Correlation started to pull back between VX cash VIX, back far more significant move today too. Back under 80% at 78.75. We see VX dropping. Uh, so we're still getting a pretty persistent short there. If we start to see that fall off more, then I would start to expect bigger upside moves and a push back towards the all-time high as short volatility positioning compounds and uh, that volatility falls off. Fed fund futures, I guess, up a little bit on the day, but down overall from last Friday. The 10-2 pulling back a little bit. There still remains like a small spread on SOFR, 3 basis points. Nothing significant, but keep an eye on it if it gets blown out again. There's more cash problems. And then here, I guess we want to look at SPX. 10% scale. Regular? No, I'll just do index to 100. So, yeah, we're still, well, you know what, I'll switch this to, there we go. So leverage pretty flat on the day, but SPX rising. We did get a little bump in leverage on Friday though, so continuously higher through this period, regardless, even with the pullback. Leverage has not diminished much. On the technical side of things, we broke out above and closed above the 20 moving average, gapping over the 30 and 20 in the overnight. Tested the 68.36 level, but failed to break above that. Gap fills up here in the 50s, and then the next upside would be the test of the failed trend. And that's, I would either look for resistance at the gap fill or at the retest of the trend, but I don't think we get too much resistance here right now. This is definitely a fairly bullish reversal so far. And until that breaks back down, like under the 20 MA, it's going to stay that way. Anything else? Yeah, a lot of gainers in tech, bit in health tech. Finance not doing so great today, but some of the fintech stuff is, like Coinbase hood. Looks like a little rotation out of non-durables, but not too much. Utilities fell. Health services dropped back again, so a bit more risk on. And producer manufacturing climbing back up. BTC up, but F down. It's probably still some cash issues, I would say, because of the SOFR spread. So we may still continue to see some underperformance from crypto. So that's an really obvious place for people to get short-term cash. And I think that's it for the day. So thank you guys so much for tuning in. I'll see you bright and early tomorrow. Later.